Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NISSIN FOODS interim report. NISSIN Foods Company Limited offers a diverse range of businesses and services, including manufacturing and selling instant noodles, producing retort and frozen foods, beverages and snacks, vegetables, fruit juices, cup noodles, sauces, packaging materials for instant noodle products, publicity services, trading in instant noodle, vegetable, and packaging material products, administrative management services, human resource services. NISSIN Foods Holdings stock price has seen a significant decline over the past year. Despite reaching a historical high of Yen 51.0 in late 2023, the company's stock value dropped to approximately 29.0 as of July 2025, representing a 40% decrease from its peak levels. The main factors contributing to this decline include margin pressure in the Americas due to rising labor and freight costs, profit-taking by institutional investors after a recent stock split, and a general compression of valuations. These factors have led to a prolonged decline in the company's stock price over the past year. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, the instant noodle business has shown solid performance in various markets, including Hong Kong and mainland China. The introduction of new products, such as Demi Iko roast beef flavor and Nissin Raya, has also contributed to revenue growth. Additionally, the company's premiumization strategy in mainland China has expanded its product offerings and increased revenue. Geographical expansion, particularly in mainland China, has also been a significant driver of revenue growth. The introduction of digital channels, including WeChat mini programs and social media platforms, has further boosted brand awareness and sales volume growth. On the other hand, the primary drivers of revenue decline include weak consumption sentiment on frozen food products, which has led to a drop in exports. Additionally, interest income from bank deposits decreased significantly, while purchases of raw materials also declined. Net income and profit margins decline. The financial performance of a company has shown a decline in key metrics over the past year. Net income decreased by 7.4% from $169.5 million in 2024 to $157 million in 2025, indicating a reduction in earnings. The gross profit margin also declined, decreasing by 1.4 percentage points from 35% in 2024 to 33.6% in 2025. The decrease in net income and profit margins can be attributed to various factors, including changes in market conditions or operational inefficiencies. Despite an increase in adjusted EBITDA of 1%, the decline in net income and profit margins suggests that other expenses may have outweighed this gain. Further analysis is required to understand the underlying causes of these declines and identify areas for improvement. The company's financial performance indicates a decline in its ability to generate positive operating cash flow. Despite efforts, the net operating cash flow remains in the red, totaling $3,538,844, as stated on page 29 of the financial summary. This negative trend suggests that the company is struggling to cover its operational expenses, posing a challenge for its long-term sustainability. The company's financial performance varied across different regions. Notably, Hong Kong and mainland China segments demonstrated strong performance, contributing positively to the overall revenue. In contrast, the head office segment struggled, indicating areas for improvement in operational efficiency. These regional disparities highlight the need for targeted strategies to optimize performance across all segments. The company's management is optimistic about its future prospects, with a clear focus on growth and expansion. Key strategies include expanding distribution channels and investing in production facilities in Hong Kong and mainland China. This indicates a commitment to increasing capacity and reach, positioning the company for long-term success. There were no notable acquisitions or divestitures in this financial period. The company's focus remained on its existing operations and investments, with no significant changes to its portfolio through mergers or sales of assets. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary highlights concerns regarding inventory buildup or supply chain disruption. A closer examination of the data reveals potential issues that may be contributing to these concerns. On one hand, an increase in cost of sales and selling and distribution costs is evident, page 28. On the other hand, a significant decrease in raw material purchases, 27%, contrasts with a moderate increase in sales of both raw materials and finished goods, 16%, page 58. This discrepancy suggests that while demand for products may be increasing, the company's ability to meet this demand through efficient supply chain management is being compromised. As a result, inventory buildup or supply chain disruption could become significant issues for the company. That concludes the financial summary for NISSIN FOODS. Feel free to comment below, and I will be happy to answer them when possible.